Hi, Larry Berman here, and here's what's on my radar this week. Well, the long bond auctions were a big part of the week, as were the beginning of earnings season, and both actually started off really, really well. The backup in bond yields in the last couple of weeks, bond market pretty much digested the supply really well. And that's good in the short run. We also saw slightly softer inflation numbers, and we saw slightly better demand numbers. Research paper out of the UK, though, suggested that the drop in consumer confidence we've seen recently is our best indicator of a pending recession, and has been the best forecasting tool of the past 5 or 6 recessions. So probably some food for thought there this week. And but as earnings play out here, we're expecting pretty decent numbers. So while there's still some risks as the government has done their jobs and kicked the can down the road a couple months again till December, we've got the November 3rd Fed meeting coming up, and it would appear that tapering is on the table, but it'll be as dovish probably as they can possibly make it, with just a little bit of the edge of the inflationary pressures coming off the boil, just a little bit. I still think we're very much in a mode where inflation is stickier than what the market believes is transitory. I've had a few conversations with people this week where transitory was 2 years versus the typical quarter or two of inflation. So we're looking at the transitory 2 years, it would seem. So where do markets go from here? Do we make new highs before we test the 200-day? I'm still in the camp that we're going to test the 200-day on the S&P first before we make new highs. Market may prove me wrong here, so we'll see how that plays out. So on the bull and bear pick of the week, there's not a lot that's much different than what's already happened. The strong energy and commodity play keeps playing out. Very overbought readings in many areas, and I think we're going to come off a little bit there, but you definitely want to keep buying dips in the commodity space. Gold has been extremely frustrating and continues to be very frustrating, and we actually trimmed a little bit this week. It's actually mind-boggling because it is the most compelling valuation play that's an inflation hedge, yet it's not working. So it continues to be very, very frustrating. We still think you've got to be cautious and short large cap tech, and despite the bounce here, we wouldn't be buying into it. We would be lightening up on large cap tech. So continue to like the reflation, continue to like buying on dips in the commodity space in general, and lightening up in big cap tech. Nothing's really changed there the last few weeks. Have a great week, everyone.